Okay, welcome Mukesh. Today we're going to have another session on a workshop that is an initiative of the GTC network. The GTC network is a network for leading independent tax litigators network. And today we have Mukesh Butani with us. Mukesh is a tax litigator. It's a tax litigator in India. And today we're going to talk about the interaction between principal purpose test, general anti-abuse rules, and Mukesh perspectives on India. So thank you, Mukesh, for joining this interview. It's a pleasure having you with us. Mukesh is a long-standing member of the network already, so it'll be very interesting. Thank you for joining.
Well, thank you very much for inviting me. It's always a pleasure to talk to you and talk to all colleagues from TPA. And thanks for a very, very generous introduction. I look forward to our conversation on this important topic, which from a public international law standpoint sounds like a topic where we have a consistent policy and consistent way of implementation. But as you know, legal systems all across the world differ, not just because of how domestic law, the municipal law of a state is written, but also what are the practices that are followed by the courts to interpret that law, should it get to any form of contentious or litigation. And more importantly, even if it does not get into any litigation, there are conventions that every country and every country's system has. Now, whether those conventions are driven by how tax administrations look at these issues, or they are driven by how courts would look at these issues, or practitioners would look at these issues, they are different. And hence, on this important topic on principal purpose test with regard to treaty interpretation and friction in the domestic law, I think every country will have its own set of nuances. As we are speaking, we are dealing with all these aspects in India as well. And I look forward to how you are going to shoot the questions on this topic.
Okay, so we may start. I think the first question that we have here, it's basically, we see principal purpose tests and we see general anti-abuse rules. So there's a lot of overlap in between transactions. So for example, if a transaction is not covered by the principal purpose test, does it mean that still needs to fulfill general anti-abuse rules test? Is there any hierarchy of these rules or not? Can you tell us a bit more about this?
Well, first of all, let's try and deal with the friction. Yes, you're correct that the general anti-avoidance law and the principal purpose test on the face of it does create a friction. But I think you will have to look into the friction, if any, from a country perspective. So since you have me as an Indian expert speaking on it, let me just give you a little bit of perspective on what kind of frictions, if any, that would be caused in India. And then we can look at how do we address that friction. And to your point, is there a hierarchy of how these two laws shall apply? First of all, India up until 2017 did not have a legislative general anti-avoidance rule. It had what we called it as a judicial GAAR doctrine, which means that the courts have laid down principle as to the circumstances under which a GAAR will apply through judicial principles, not through legislative principles. And that is how the system worked. From April 1, 2017, the GAAR law had started, but the Indian GAAR law does not address just the cross-border situations. The Indian GAAR law is a general anti-avoidance law. It applies over and above the specific anti-avoidance rule, and within the GAAR law, it has a provision for treaty override. Within law, it has provisions as to how the revenue can recharacterize the transaction. So this is the GAAR law. Now we all know how the principal purpose test will apply. The principal purpose test will have to be read alongside the treaties. And talk about the friction, if any, that will get created. Before we get to the friction part of it, we should understand that the Indian general anti-avoidance law is worded more liberally than the principal purpose test in many aspects. The first aspect is that the Indian GAAR law says if one of the if the principal purpose test says that if one of the is for tax benefit, the principal purpose test will kick in. Indian GAAR law is liberal in the sense that when it was originally drafted, it talked about one of the principal purpose tests, but now it says the principal purpose test. So that's one aspect which is very different between the GAAR law and the Indian principal purpose test. Uh, there is no hierarchy as such that has been provided under the Indian law. I think that the Indian tax administration will look at the satisfaction of both the GAAR provisions, which means that it is not a transaction which is driven for tax purposes. And before giving any benefit under the treaty, it will also apply the principal purpose test. So the question of in a way becomes academic to your question, because both these will have to be satisfied, though the GAAR law on principal purpose test seems to be liberally worded than the principal purpose test under the treaty.
Okay, so taking from that point, do you think GAAR is more beneficial to the taxpayer, or is principal purpose test more beneficial, or which
on
one?
the on the face of it, if you look at the condition, the GAAR law is more beneficial.
Okay,
However,
because it's wider.
Right. However, if you read the law comprehensively, you could have a situation where the burden of proof that has to be applied in the context of a GAAR law is different than the burden of proof that applies in the context of a principal purpose test. Point number one. Point number two, the domestic GAAR law comes with checks and balances, in the sense that before a GAAR provision is invoked, there has to be a procedure that needs to be followed by the tax administration. Senior officials of the tax administration make the final determination. And finally, there is an independent panel uh, chaired by a retired judge of the High Court who has to give a final approval before invoking the GAAR law. Now, all these checks and balances are not present in the principal purpose test. In a principal purpose test, it is entirely left up to the tax inspector to come to a decision that the principal purpose test has not been met, and hence should be denied. So it depends the way you look at it. I mean, which one is more tougher than the other? On the face of it, how it is drafted, on the basis of burden of proof, and the basis of checks and balances that have been built in. The last aspect that we need to bear in mind, which is from a principal purpose test standpoint, some of the treaties that we have with India, uh, before denying a treaty benefit, the competent authorities under the mutual agreement procedure or under relevant clauses of the treaty are supposed to get into bilateral negotiations with the treaty partner before denying the benefit. So in a way, there are checks and balances, at least with respect to certain treaties, which need to be followed before you conclude that a tax benefit should be denied invoking the principal purpose test. Now, we do not have that in a GAAR provision. So assuming that the GAAR panel uh, approves invoking the GAAR provision, in that case, you have to go through the normal administrative appellate process. So these are some of the differences that you need to bear in mind when you're looking at these two provisions.
Okay, no, that's very good. Thank you for the explanation. And now taking the point on passive income article. So, what is the relevance of the beneficial ownership test in the passive income article after GAAR and PPT?
Uh, well, two aspects. The beneficial ownership test uh, is not a new phenomenon. The beneficial ownership test exists as a part of the OECD Model Convention, as a part of the UN Model Convention. But for application of beneficial ownership test, you need to look into the specific treaties. Now, treaties which have an overarching beneficial ownership test. So let's take passive income by way of capital gains or dividends or royalties and fees for technical services. Or now these forms of passive income can either have an inbuilt beneficial ownership provision within those articles, or it can have a general beneficial ownership provisions. There are some treaties which, besides the general provisions, also prescribe for an overarching beneficial ownership condition. To your question, how will the beneficial ownership test apply now in the context of principal purpose test? One, it will depend from treaty to treaty. Of the treaty suggests that India would say that the ownership test always existed in the treaty, will have to be satisfied, and over and above that, the principal purpose test have to be satisfied. Now, what does that mean? That could mean two things, depending on which one are you invoking first. So is it possible to say that I'm satisfying the beneficial ownership test insofar as a category of passive income is concerned, and then I have to apply the principal purpose test? There are divergent views on this aspect. My personal view is that you have to apply the principal purpose test in order to assess whether you are entitled to a treaty benefit or not. Because the application of principal purpose test is the first stage to assess whether you can be denied or you will be allowed the treaty benefit. And thereafter comes the beneficial ownership test. That's the way I would like to read from a law standpoint.
Okay, now that's clear. Yeah, just a bit on the principal purpose test. We see a lot of wording around the main purpose, sole purpose, principal purpose, one of the principal purpose. What is the difference between them, and can the purpose extend to cases with other non-tax reasons, for example?
Well, you used some very interesting terms, main purpose, principal purpose. Let's first look at the principal purpose test. There is clearly a distinction between one of the principal purposes versus the principal purpose test. And I explained that in the context of how the law is written and how the principal purpose test works. Uh, in my view, over a period of time, either in the model convention, OECD model convention, or in the treaties that got signed in pursuance to OECD model convention, different terms are used. Main purpose, principal purpose, predominant purpose. The interpretation of each of these terms is not available in the model convention. And hence, if you have to interpret these terms, you will interpret it not from a public international law perspective, but from a domestic law perspective. So you have to go back to the domestic law to interpret these terms. But to some extent, in my view, these terms have become academic after the principal purpose test. So now after the principal purpose test, all you need to focus in is principal purpose test, one of the tests, or the principal purpose test. And that is where the distinction between GAAR and the principal purpose test comes in.
Oh yeah, that's a very interesting actually how these terms are used, and it end up confusing more taxpayers, right? Because if you're using sole purpose, principal purpose, or one of the principal purposes, what is the impact really on the taxpayer side? So, and on that sense, do you think that one of these purpose can be extended to non-tax reasons, or we're only here talking about sole purpose related to tax, for example, principal purpose related?
So if I am identifying the impact of a transaction testing the domestic GAAR in India, I can build in a commercial test and come to a conclusion that besides the tax reason, I had a non-tax reason. And because I had a non-tax reason, the sole purpose or the main purpose was not to take a tax advantage, and hence it does not meet the criteria which will attract the general anti-avoidance rule.
Okay.
That's correct if you're applying the domestic GAAR, but that argument may not be correct if you're applying the principal purpose test, because the principal purpose test is very clear that it should be one of the main purposes, and hence the test under the bar under the principal purpose test is much more higher than it has ever been, and hence the carve out to demonstrate that the principal purpose test is met is now lying with the taxpayer, because then the taxpayer has to demonstrate that despite the fact that the main purpose or one of the main purposes was tax, it is still within the objects and the purpose of the treaty.
Okay, now that's